Hi everyone, welcome to Boothy Bites. Boothy, quick month, hey? February flew by. We're back with the March edition.
Yeah, we're back. Yeah, welcome, Jackie. I'm excited to do it again, and plenty happening. So let's get cracking.
All right, so we're going to start with a Lydian HQ wrap up. What's been happening around the office?
Well, we're very lucky. So we've kind of opened up this new year. We've got a few new great mortgage brokers. So I think in the email I mentioned that we've got Kyle joined us, and he's a New South Wales mortgage broker. He's been self-employed for many years, been doing mortgage broking on the side, wants to specialize in mortgage broking now, and we're proud to have Kyle on the team. And so he's started and operational now. We had Jorge, who joined us, who's an ex-engineer and joined us at the end of last year. So again, he's in that Western corridor there as well. And then more recently, our Lydian private team have added two new guys to their team. So Alex Bourne came on at the end of last year, and we've also got Lachlan as well. Lachlan Wraith joined us. So Lachlan will be kicking off with the private boys as well this month. And all guns are blazing.
Pew, pew. Sounds good. What a great start to the month. Now, let's talk
I've got a special friend joining as well. Oh, I forgot to mention. So, but we'll probably mention it next month. But anyway, my good friend Michael Leonard and his lovely wife Kathy. Kathy's decided to become a mortgage broker. So Kathy's been working in property for many years, and anyway, she's seen Lydian from afar, and we started talking about what mortgage broking is, and Kathy's been doing some training with our Melbourne office with the Clark team, which has been lovely, and she's really enjoying it. So she's had great mentorship from Tabitha, Jackie, Vaughan, and the guys there. And Kathy's going to be a mentor broker for us as well. So it's really nice when you can help a very good friend of both Lydia and also personally, and his beautiful wife. So we're looking forward to Kathy hosting our China desk when we get cracking. But I think
amazing.
She'll probably poo me on that idea anyway.
We'll soft launch it now. There you go, Kathy.
That's it.
All right, let's move on to the RBA. So the next announcement being the 17th of March. What are you watching most closely as we head into that decision?
Oh, well, it's been crazy, hasn't it? I mean, look, you can't not watch the news and start getting pretty amazed about how quickly things have escalated in the Middle East from pretty much nothing. But that sentiment has really changed a lot for the RBA. I mean, where we were talking in February with potentially some inflation, some sticky inflation, that now really has some bigger conversations around this challenge for the RBA with inflation, but also more importantly, the really big jump in the fuel costs that we've just seen at the Bowker. So look, that's a worry. So I think in my email I sent out to partners, we'd gone from $60 US to $80 for a barrel. And I think on Monday when we came to work, which was yesterday, I think in the US it was over $100 a barrel, right? Which has subsequently eased a bit with some of the Trump rhetoric tonight. But it's no doubt about it, it's pretty volatile. And, the RBA are safe, steady, slow, reassuring hands. And all of this chaos and noise will put a bit of a cat amongst the pigeons for them. So, interestingly, the markets, which I talk about, like the bond markets and things, there was a big sell-off on the bond markets as well over the weekend. And what that means is that the interest rates associated with our sort of 90-day bills, our 3-year bonds, our 10-year bonds, they've all increased by sort of 20, 25 basis points as well. So that's factoring potentially an interest increasing cycle now to combat this sticky inflation as well. So sadly, I think we might be up for a rate hike in March in 7 days, which would be pretty crazy. What I'm hoping is that the RBA has got some softer hands to manage it and probably says, well, really all this noise and stuff is crazy, and that's what it is. It's noise. That will subside in the next month, with some calmer, more measured, appropriate action in the Middle East. And hopefully that sort of settles down and we get a bit more world order in the next few months. And that means that they'll be a little bit less inclined to increase twice. But certainly for now, with the measures of the markets, we're looking at sort of 2 hikes in the next sort of 3 months, which is a real big change in sentiment.
Absolutely. Now let's chat about the banks. So what are you seeing across the lenders at the moment?
Yeah, so we had that hike last month. So all of the lenders have passed on that 25 basis points now, which is cool. Some of our well-priced securitized lenders, so we've got MoveBank, they're at 539. Sorry, not securitized. Some of our sort of second tier lenders, as it were. Kudos have got a 544 P&I variable as well. And then I suppose Macquarie Bank's always our leveler, so they're at 559 variable P&I right now. Bank Vic have got some specials on their fixed, so I'm not sure whether they're still there today because I've not checked just before this conversation, but they had a 2-year to 529, which is good money right now, and also a 3-year at 549. That's P&I fixed rate variable. If you're looking for investor debt, an interest only rate there is at 564 with People Choice, and if you're looking to fix, again, 569 2-year fixed interest only at Bank Vic. So, yeah, maybe there's a bit of money in that fixed rate space, but certainly I think the banks will start increasing their fixed rates, if not this week, next week, and we'll just watch that space and report on it, yeah?
Yeah, absolutely. Now, you mentioned in an email that AMP are back with the self-managed super fund, or within the self-managed super fund lending space. What does that mean for people looking to invest through their super?
It's been a popular thing, certainly when the constraints of the family budget have taken, you can't afford to buy an investment property in your family budget right now. So people have been looking to purchase that property in a super fund environment. Now, I'm not saying it's for everyone. I think you've got to have advice around that. I think you need a larger than average balance to do that and not just load up in a single asset. But nonetheless, it's been very popular just in the last sort of 12, 18 months. There's a lot of support for self-managed super fund transactions, and where the banks exited that market sort of 5-6 years ago, the non-banks like Liberty, Pepper and others now have come into that space and have supported. But it's interesting that AMP are back. So I think what they're looking to do, they're looking to diversify their banking products, obviously sort of clawing back some of the interest margin on some of the products that they offer is important to them, which a self-managed super fund loan certainly does. They're priced a lot higher than the owner-op variables and things. So yeah, they're looking to diversify their product range, and this is their first one to come out recently. And yeah, so self-managed super funds at AMP are back. And again, it's a household name. AMP are aligned with the planning space. So, for us, it makes sense. So sensible decision. Well done, AMP.
And so you've just launched the new Property Coffee Club blog. What was the idea behind that one?
Well, I suppose we launched the Property Coffee Club, and we also launched Lydian Property Advisory. Anyway, I feel when we're going to our partners, a lot of our partners are very happy, to refer us that lending. But many times when we're speaking to those clients, we have to address property as well. And financial planning licenses and things really don't allow advice on property for financial planners. And obviously, as a mortgage broker, we don't want to be giving, advice around, which property, where that location is and things like that. We want to rely on specialists and have another professional chair in our business. So, if we're lining up with our professional partners, we want to have and come to them with a professional property chair. If the partner chooses to utilize, our trusted property specialist, well, then that's great, because then we know that the client's going to get good service. It's a transparent fee arrangement, and the outcome for the property that the client will purchase eventually, we hope will be better than the average. So yeah, so what we want to do is really sort of start exploring some of these niches that these businesses that we have relationships with have, and start exploring some of the markets that they're investing in. So the first cab off the rank was Reece Marini, and he's part of the Allens Wargent Group. So Pete Wargent runs a buyer's agent service basically down the Eastern Corridor, mainly looks after Sunny Coast himself. He's got 2 boys in Brizzy. We've got Reece there in the Central Coast and the Hunter region. I really like that Hunter region, Central Coast and Newcastle story. So we kicked the first sort of comms off with Reece, and Reece has got a great lens around Newcastle. He's bought well there. Some of his clients many of his clients have done really, really well with his advice around buying property. And I think, from a price point, it's a little bit more affordable than, say, Sydney. Potentially is not, increased as much as some of the areas like Brisbane or Perth. And again, Newcastle's a very strong centre with regards to infrastructure and things like that. So it was really nice to speak to Reece. And I think the biggest thing is really it's sort of an education piece for our partners around, yes, we can provide, quality property services as well, and for them to learn a little bit about some of these places so they can be on that journey with us, yeah?
Yeah, absolutely. So good. Well, Boothy, that's everything I've got for you. Do you want to add anything on the end here?
Well, there was one product that we did put in that message, and I wanted to sort of kind of call it out. So obviously, when we're dealing with our partners, we're going to get the Macquarie PAYG home loan, right? That's it, because they're the easy ones. But the hard ones are always the ones where clients are going through a particular sticky situation, tough situation, either can't afford it. The banks won't lend them, that money. There's a problem with valuation, or something that's happened in their life is really, they've got a need, but the contemporary lenders don't support them. So often when we're socializing solutions, we're socializing the harder ones with our partners, so they kind of go, well, that's why Lydian, really, because yes, everyone can do the easy ones. Now, interestingly, this last month, a new business has landed in our panel at SFG called Midkey. Midkey was quite interesting for me, very much solutions based. The second part of it is a code facility, so they're not looking to rip off clients with extremely high interest rates and not protect them with the overarching credit policies and credit legislation that we have. It works like a kind of a bridging service. So really, if you've got a large asset with lots of equity and you've got an exit strategy, i.e. the sale of that property over a certain period, and you need to borrow some money out of that property, this business Midkey will lend you some money. And things like, maybe you're going through a divorce and you probably can't afford the property today, but you want to hold on to it for a couple of years longer to make sure that kids get through school. Or maybe you've got to do some urgent renovations on the home. You can't afford the renovations, but you want to do the renovations before you sell, so you can do it. So things like that, really. So what happens in this situation is that Midkey will lend you the money. Let's say you've got $1 million and you've got $100,000 to borrow on that property. They will lend you the $100,000. But what they do is they will compound the interest costs, and the interest costs aren't crazy. It's around about sort of 7-8%. So it's not 10-15%. It's not like credit card rates. But one of the things that they do is they want to have like a lien or quasi like almost like a bit of ownership in your property as well. So if the property goes up in value, they want to benefit to the extent they're invested in your property. So which is interesting. So it's like the old home reversion scheme. So it's not for everyone, and certainly the terms and the conditions of it you need to go through quite finely, and obviously get a solicitor to look over that for you. But if a client's in a bit of a sticky situation, needs some money, they've got that equity in the property, Midkey will lend them the money, and then we'll work on what that exit is. And it may well be an exit like we actually we get employed, we earn a bit more money and can pay a normal loan to refinance that debt. So it doesn't have to be to sell the property. So anyway, big shout out to Midkey and the team at Midkey for coming up with something different and protecting some of our mums and dads consumers rather than going out and flogging the private thing. So anyway, that was my shout out for another niche service.
Love it. Well, thank you so much for your time, Boothy. Thanks to all our viewers and listeners, and we'll see you next month, yeah?
Yep, and I promise I'll get a haircut and a shave next time. I look very shabby.
Me too. I'll have a shave as well before our next episode.
Okay, Jackie, see you later. Ciao, ciao.
See ya.